Hello, you're watching the business headlines on HW News with me, Ali Azhar. Crisis hit mortgage lender Dewan Housing Finance Ltd or DHFL has defaulted on its repayment obligations for a second time this month, setting into motion a further crisis at the already embattled NBFC. DHFL, in a regulatory filing on Tuesday, announced that it had made only partial payment of 150 crore rupees out of a total of 375 crores of commercial paper due for repayment to a dozen investors on Tuesday. It, however, further went on to say that it would pay the default 225 crore rupees, which is about 60% of the total amount, over the next couple of days when its surplus cash flow position improves. Earlier this month, on June 4th, just before the Eid festival, DHFL defaulted on interest payments of 850 crore rupees on its non-convertible debentures, following which its credit rating was downgraded to default or D by credit rating agencies CRISIL and ICRA. However, the mortgage lender was able to pay the interest within 7-day grace period given by the bondholders. DHFL has been hit by one adversity after another since the last 10 months. It was the worst casualty of the liquidity crisis that engulfed the NBFC sector in September of last year, when defaults in IL&FS dried up fund flows and caused an abnormal increase in the cost of funds for mortgage lenders and NBFCs. Then, in January, media outlet Cobra Post, that is famous for its sting operations, came out with a startling revelation that claimed that DHFL had diverted loans to the tune of 31,000 crores via shell companies and siphoned off this money to illegally enrich their promoters, the Wadhawan family. A series of defaults, downgrades and asset sales later, the company that was once India's third largest home financier now is just managing to stay afloat. All these events, however, have managed to take a big toll on its share price. From trading at close to levels of 680 rupees per share in September, just before the liquidity crisis, DHFL's share price now stands at a level just below 80 rupees per share, which translates into a loss of approximately 90% since then. The company is, however, making an effort to meet its outstanding debt obligations by selling assets and has managed to repay loans close to 40,000 crores of its financial obligations since September, it claimed in the regulatory filing. Over the past few months, DHFL has sold retail loans worth 30,000 crores via the securitization route. It has also sold several other strategic retail assets. Further, it has also sold 1,375 crores worth of wholesale loans to a foreign asset manager and a loan portfolio worth 2,000 crores to offshore investors in an attempt to raise funds to meet repayment obligations. Mukesh Ambani-led Reliance Industries Ltd or RIL has clarified its position on a news item about the company diverting corporate social responsibility or CSR funds for other activities. Certain companies, such as those with a turnover of more than 1,000 crores or with a profit of more than 5 crores a year, are mandated with undertaking CSR activities by the Companies Act for the betterment of the community and the environment. Businesses can invest part of their profits for educational and social programs, poverty upliftment, gender equality, hunger reduction, etc. On June 19th, DNA had reported that the Ministry of Corporate Affairs or the MCA had served a notice to RIL for diverting funds to the tune of 1,740 crore rupees earmarked for mandatory CSR activities. A complaint was made by a whistleblower to the Department of Economic Affairs of the Finance Ministry. 3 projects of RIL have come under the scanner since then: the Reliance Foundation Hospital and Research Centre in Navi Mumbai, Reliance Jio University in Navi Mumbai, and Dhirubhai Ambani Hospital in Panvel. The ministry has asked RIL to furnish details of funding, operations and revenue for each of the 3 projects. Reliance clarified via a statement: the company is proud to be the largest corporate contributor to CSR in India. The company is in compliance with CSR requirements under the Companies Act 2013, and detailed disclosure is made in the annual report of the company each year, duly certified by the company's statutory auditors. On another note, Reliance Industries said it has signed a pact with overseas lenders to avail long-term loans of $1.85 billion, that's roughly 13,000 crore rupees, to finance capital expenditure. The fundraising comes amid reports of the company planning to infuse as much as 20,000 crores into its telecom unit Jio ahead of a potential entry into 5G telecom services in the future. The fundraising also comes amid a report published by Bloomberg a fortnight ago stating that Reliance Industries now contributes the most to debt of the Nifty 50 companies, contributing 16.7% of these listed firms. Total debt of the oil to telecom conglomerate rose to 2,72,000 crores or 2.72 trillion for the year ended March 2019 due to higher capital expenditure. Thank you for watching HW News. This is me signing off. Have a great day.